Have you ever wondered why building your first $100,000 feels almost impossible, while the next $100,000 often comes much faster for the same person? Most people believe wealth comes from working harder, earning more money, or finding the perfect investment. But what if they've been chasing the wrong goal? What if becoming wealthy isn't about how much you earn, but about reaching one financial milestone that completely changes how money grows? My name is Jeffrey Sachs Invests, and I spend far too much time thinking about why wealth accelerates after the first $100,000, not before it. If you've been working hard, saving consistently, investing whenever you can, yet financial freedom still feels frustratingly far away, this video is for you. Before we begin, if this video brings you value, I invite you to subscribe and turn on notifications because financial education pays dividends forever. Remember this powerful idea: the greatest investment you'll ever make isn't in stocks, real estate, or cryptocurrency. It's the knowledge guiding every financial decision you make. Today, you'll discover why the journey to wealth feels painfully slow at first, why almost everyone quits too early, and how successful investors escape that trap. By the end of this video, you'll understand why the first $100,000 changes everything and how you can position yourself to let money finally work for you. This isn't about getting rich overnight. It's about understanding the financial principle that quietly separates people who stay broke from those who build lasting wealth. Let's begin. Here's the biggest lie most people believe about becoming wealthy: if you simply earn more money, your financial problems will eventually disappear. It sounds logical. A higher salary should mean a better life, more savings, and faster progress toward financial freedom. But reality tells a different story. Think about it. How many celebrities, athletes, and executives have earned millions only to end up broke just a few years later? If income alone created wealth, every lottery winner would stay rich forever. Yet countless studies show that many lose everything within just a few years. The problem isn't making money. The problem is believing that income and wealth are the same thing. They aren't even close. Income is simply the money that passes through your hands. Wealth is the money that stays, grows, and continues working even while you sleep. Imagine two friends earning exactly $100,000 every year. From the outside, their lives appear almost identical. The first buys a luxury car, upgrades to a bigger house, takes expensive vacations, and spends every raise as quickly as it arrives. The second drives a reliable car, keeps living below their means, and invests every extra dollar into assets that quietly grow year after year. 10 years later, one still depends entirely on the next paycheck. The other owns investments generating income without requiring additional hours of work. That's the invisible difference between looking wealthy and actually becoming wealthy. One lifestyle impresses strangers, the other creates lasting financial freedom. Financial education teaches a simple but powerful lesson: don't focus on increasing your income first. Focus on increasing the percentage of income you actually keep. Every dollar you save and invest becomes an employee working for you 24 hours a day, 7 days a week, without ever asking for a raise. The earlier you hire those financial employees, the longer they have to multiply your wealth through the incredible power of compound growth. In the next section, we'll explore why reaching your first $10,000 feels incredibly difficult, and why that struggle is actually preparing you for everything that comes next. Every millionaire remembers one number that changed everything. Surprisingly, it wasn't $1 million. It wasn't even 100,000. It was the first 10,000. Why? Because earning your first $10,000 isn't really about the money. It's about proving to yourself that building wealth is actually possible. At this stage, every dollar comes directly from your time. If you stop working, your income usually stops as well. That's the reality for most people. Your savings grow painfully slowly. Some months you move forward. Other months, an unexpected expense wipes out weeks of progress in a single day. It's frustrating because the results don't seem to match the effort. You work harder, save more, yet your financial life barely appears to change. This is exactly where most people give up. They convince themselves that investing doesn't work, that wealth is only for the lucky, or that they're simply too late. But here's what they're missing. The first $10,000 isn't supposed to make you rich. It's supposed to transform your financial habits. Think of it like planting the first seed in a forest. One tiny seed doesn't look impressive, but without it, there will never be thousands of trees. Financial education isn't just about numbers. It's about developing behaviors that repeat automatically, even when nobody is watching. Learning to spend less than you earn, investing consistently, and avoiding unnecessary debt are small actions that create extraordinary results over time. The people who succeed financially aren't always the smartest. More often, they're simply the most consistent. They keep investing even when progress feels invisible. Imagine climbing a mountain covered in thick fog. You can't see the summit, so every step feels uncertain, but each step still brings you closer. Wealth works the same way. The biggest rewards usually arrive after months or even years of progress that nobody else can see. Your first $10,000 is proof that you've stopped consuming every dollar you earn and started building assets that can shape your future. Once that foundation is built, reaching the next milestone becomes dramatically easier. And that's exactly why the journey to $100,000 changes the game completely. Now we arrive at the milestone that countless investors, entrepreneurs, and financial experts consider the true turning point on the road to wealth, the first $100,000. At first, that number sounds overwhelming, maybe even impossible. But the reason it's so important has nothing to do with status or prestige. It matters because this is often where your investments begin contributing meaningful growth instead of relying almost entirely on your monthly savings. Think about your financial journey like pushing a giant flywheel. The first few pushes feel exhausting and the wheel barely moves an inch. You keep pushing anyway, slowly, almost invisibly, momentum starts building. Then something remarkable happens. The wheel begins spinning with far less effort. Your investment portfolio behaves the same way. During the early years, your own contributions create nearly all the growth you see. But once your portfolio becomes large enough, your investments start generating returns that can equal or even exceed what you're personally adding each year. That's the moment many people describe as financial acceleration. Suddenly, your money becomes an active partner instead of remaining a passive savings account. Imagine investing $10,000 every year. In the beginning, your contributions completely dominate the growth of your portfolio. Years later, your investments might earn another $10,000 without requiring a single extra hour of work from you. That's when you begin experiencing the real power of compound growth. Your wealth no longer depends only on your effort, it also depends on time. Financial education teaches an important lesson here. Time is one resource you can never replace. The earlier you invest, the more years compound growth has to work. This is why waiting for the perfect time is often the most expensive financial mistake anyone can make. Every year you delay has a hidden cost. The goal isn't reaching $100,000 just to celebrate a number. The goal is reaching the point where your money begins helping you build even more money. But even after crossing this incredible milestone, many people unknowingly make mistakes that slow everything down. In the next section, we'll uncover the biggest ones and how to avoid them. Here's the moment almost nobody talks about. One day, without realizing it, your investments can earn more money in a year than you managed to save. That sounds unbelievable at first, but this is the exact moment when wealth begins following a completely different set of rules. Imagine you've built an investment portfolio worth $100,000, earning an average annual return of 10% over the long term, without working extra hours, without asking for a raise. Your portfolio could generate around $10,000 in growth during a strong year. Now ask yourself this question: how many people manage to save an extra $10,000 every single year from their salary alone? For most families, that's incredibly difficult. But once your investments reach that level, your money begins sharing the workload with you. This is why wealthy people often say the first 100,000 is the hardest. After that, momentum starts replacing pure effort. Think of riding a bicycle uphill. At the beginning, every pedal stroke feels heavy, slow, and exhausting against gravity. Eventually, you reach the top. Suddenly, gravity starts helping instead of fighting you. The same energy now carries you much farther. Money behaves in a surprisingly similar way. Early on, your discipline creates almost all your progress. Later, compound growth begins multiplying that discipline. Financial education teaches that every invested dollar becomes a tiny financial worker. Alone, one worker achieves very little. Together, thousands create extraordinary results. That's why consistency beats intensity almost every time. You don't need one perfect investment, you need years of steady investing without giving up. Many people quit because they expect explosive results too early. They underestimate what can happen after 10 or 20 years of patient investing. The people who achieve financial independence usually aren't chasing shortcuts. They're building systems that allow their money to grow quietly year after year. But reaching this stage isn't enough. Many people accidentally destroy their momentum through a handful of costly financial mistakes. In the next section, we'll uncover the biggest ones before they slow your journey to lasting wealth. The biggest threat to your financial future isn't a market crash. It isn't inflation, and it certainly isn't a recession. It's what happens after you start making more money. Most people assume that earning a higher income automatically leads to building more wealth. Unfortunately, that's exactly where many financial journeys begin to fall apart. As income increases, expenses usually increase right alongside it. A better salary becomes a bigger house, a newer car, luxury vacations, and monthly payments that quietly consume every raise. This is called lifestyle inflation, and it's one of the most dangerous financial traps because it doesn't feel like a mistake, it feels like success. Imagine two people who both receive a $20,000 raise. One spends almost every extra dollar. The other continues living the same lifestyle and invests the difference. 5 years later, they may earn the same salary, but financially, they're living in completely different worlds. One owns expensive liabilities that constantly demand more money. The other owns productive assets that quietly generate even more wealth every single year. Financial education teaches a simple principle that wealthy people rarely ignore. Every raise is an opportunity to buy more freedom, not just more possessions. The goal isn't to look richer, the goal is to become richer, even if nobody notices your progress today. Another costly mistake is trying to beat the market with constant buying and selling. Many investors mistake activity for progress. They believe every headline demands action. Every market drop creates panic. Every rally creates excitement. Their emotions become their investment strategy. Successful investors understand something different. Wealth is usually built by patience, consistency, and discipline, not by constantly chasing the next opportunity. Think of planting an orchard. You wouldn't dig up your trees every week just to check whether the roots are growing. Investing works exactly the same way. Constant interruptions often slow the very growth you're hoping to accelerate. The people who reach financial independence aren't necessarily the ones who make the smartest decisions every day. More often, they're the people who avoid the biggest mistakes year after year, allowing time and compound growth to do the heavy lifting. Because once you stop fighting against the process, something remarkable begins to happen. Your habits become stronger than your emotions. And in the next section, you'll discover the mindset that separates people who simply earn money from those who consistently build lasting wealth across decades. The biggest difference between wealthy people and everyone else isn't intelligence. It isn't luck, and it certainly isn't working harder than everyone around them. The real difference is the way they think about money. While most people see money as something to spend, wealthy people see it as something to multiply. Every dollar they earn has a purpose before it ever reaches their bank account. Instead of asking, "What can I buy?" they ask, "What can this dollar become?" That single question changes everything. It transforms money from a temporary reward into a permanent tool for building freedom. Imagine receiving a $1,000 bonus. One person immediately spends it on the latest phone or a weekend getaway. Another person invests that same $1,000 into productive assets that may continue growing for decades. Both enjoy the reward, but only one creates future opportunities. Financial education teaches that every dollar has possible jobs. It can finance today's lifestyle, or it can finance tomorrow's freedom. The wealthiest people don't deny themselves enjoyment forever. They simply delay some gratification so they can enjoy much greater freedom later. Think about a farmer during planting season. If the farmer eats every seed, there will be nothing left to harvest in the future. Money works the same way. Every dollar you consume today is a dollar that can no longer grow for you tomorrow. This doesn't mean you should never spend money. It means your spending should support your long-term goals instead of quietly working against them. Wealthy people also understand the incredible value of time. They know that starting early is often more important than investing large amounts later. Someone who invests consistently for 30 years often builds far more wealth than someone who waits 10 years and tries to invest twice as much. That's because compound growth rewards patience more than perfection. Time quietly becomes your greatest financial partner. The most successful investors don't obsess over getting every decision exactly right. They focus on making consistently good decisions over very long periods. They understand that financial freedom isn't built through one brilliant investment. It's built through thousands of disciplined decisions that seem ordinary on their own. Once you begin thinking this way, your relationship with money changes forever. You stop chasing quick wins and start building lasting wealth. And that brings us to one of the most powerful financial forces ever discovered: the extraordinary power of compound growth working silently in your favor every single day. Compound interest has often been called the eighth wonder of the world. Yet most people never experience its true power because they give up long before it has the chance to work. At first, compound growth is almost invisible. Your portfolio increases so slowly that it feels like nothing is happening, even though progress is already taking place. Imagine planting a tiny oak tree in your backyard. During the first few years, it barely seems to grow. You might even wonder if it's worth the effort. But beneath the surface, something remarkable is happening. The roots are expanding, becoming stronger and deeper every single day, preparing for years of rapid growth. Your investments follow the exact same pattern. The early years build the foundation that supports extraordinary growth later in life. Now imagine placing a single snowball at the top of a snowy hill. At first, it rolls only a few inches and barely changes in size. As it keeps moving, it gathers more snow. It becomes heavier, larger, and faster until its own momentum drives its incredible growth. Money behaves in much the same way. Every dollar your investments earn begins generating returns of its own, creating a cycle that becomes stronger over time. This is why consistency matters far more than perfection. Small investments made regularly can eventually outperform large investments made too late. Financial education teaches that compound growth rewards patience, not excitement. The greatest returns usually belong to those who stay invested through uncertainty. Many people interrupt this process by trying to time the market. They buy when prices feel safe and sell whenever fear takes control. Ironically, those emotional decisions often destroy years of potential growth. The market rewards discipline far more often than prediction. The investors who build lasting wealth understand that temporary declines are part of the journey, not a signal to abandon their plan. Instead of focusing on today's headlines, they focus on where their investments could be 10, 20, or even 30 years from now. That's because every additional year gives compound growth another opportunity to multiply what has already been built. Eventually, there comes a point where your portfolio grows by more in a single year than you invested yourself. That's when you truly understand the power of patience. The secret isn't finding a magical investment that doubles overnight. The secret is allowing time to quietly transform ordinary decisions into extraordinary financial results. Now that you understand how compound growth accelerates wealth, it's time to turn these ideas into practical steps you can begin applying immediately, regardless of where you are today. By now, you understand why building wealth becomes easier after your first $100,000, but knowledge alone won't change your financial future. Action will.
The question isn't whether compound growth works. The question is whether you'll give it enough time to work for you. So where should you begin if you're starting from zero, or if you feel like you're behind? The first step is surprisingly simple. Spend less than you earn, no matter how much money you make. Without this habit, every other strategy eventually falls apart. Next, build an emergency fund. Financial setbacks are inevitable, and having cash available prevents temporary problems from becoming long-term financial disasters. Once that foundation is in place, begin investing consistently. Don't wait until you have the perfect amount or the perfect opportunity. The market has never rewarded people for waiting until everything felt certain. It has rewarded those who stayed consistent through uncertainty. Automate your investments whenever possible. The less often you rely on motivation, the more likely you'll continue investing for years to come. Another important habit is increasing your investments every time your income grows. Let your portfolio benefit from every promotion before your lifestyle does. Think of every raise as fuel for your future, rather than permission to spend more today. Just a small increase in your investment rate each year can create an enormous difference over the next 2 or 3 decades. At the same time, continue learning. Financial education is one of the few investments that can improve every future financial decision you make. Read books, study successful investors, understand how markets behave, and never stop improving your knowledge. Remember, wealthy people don't simply own assets. They understand why those assets create value over time. Most importantly, be patient with yourself. Building wealth isn't a sprint measured in weeks or months. It's a marathon measured in years. There will be periods when your portfolio barely moves. There will also be moments when markets decline and doubt begins to creep in. Those are often the moments that separate future millionaires from everyone else. The people who stay committed during difficult times are usually the ones who benefit the most when growth returns. And now that you know both the strategy and the mindset, there's one final lesson that ties everything together, and it may completely change the way you think about money for the rest of your life. The journey to wealth isn't defined by a single investment, a lucky opportunity, or a perfect decision. It's defined by the small choices you repeat over and over again. Every dollar you save, every investment you make, and every unnecessary expense you avoid becomes another step toward financial freedom. Remember where we started. Most people believe building wealth is supposed to get harder. The truth is exactly the opposite. If you stay consistent, wealth eventually begins helping you create even more wealth. That's why the first $100,000 is so important. It isn't magical because of the number itself. It's powerful because of what it represents. It represents years of discipline, patience, and smart financial decisions. Think back to the boulder we imagined at the beginning of this video. The hardest part was never keeping it moving. The hardest part was pushing it until gravity finally started working in your favor. Money follows that same principle. At first, you work for every dollar. Eventually, your dollars begin working for you. And once that shift happens, Every year of patience becomes more valuable than the one before. Financial freedom isn't reserved for people with extraordinary talent. It's available to ordinary people willing to make extraordinary decisions consistently. You don't need to predict the next stock market boom. You don't need to discover a secret investment that nobody else knows. You simply need a plan, the discipline to follow it, and the patience to let time do what it has always done. Years from now, you'll either wish you had started today, or you'll be grateful that you did. The choice you make after watching this video could become the decision your future self thanks you for every single day. If you found value in today's video, don't forget to subscribe to Jeffrey Sachs Invests and turn on notifications so you never miss future lessons on building long-term wealth. And I'd love to hear from you. What is your biggest financial goal, and how close are you to reaching your first $100,000? Leave your answer in the comments below. Remember, every expert investor was once a beginner who decided to take the first step. Keep learning, keep investing, stay patient, and let your money work harder every single year. Thank you for watching, and I'll see you in the next video.